Good evening traders, it's Simon here with your weekly review of the DXY and some dollar pairs. So we're going to go over Oz dollar, Euro dollar, pound dollar, Kiwi dollar and dollar CAD in this video, just to show you what we're looking for. We might include dollar yen as well, but I'm not very happy on that pair. It looks a bit messy, but I'll explain why. So the DXY last week, we expected it to move down. Didn't move. It has moved down, but not as cleanly as we would have liked to. Now I'm not too bothered about it stopping at daily 50 EMA. We've chopped through it so many times now, I really couldn't give a damn about the daily 50 EMA. Bear in mind, when we was around this area, yes, I did care about it as it coming up, but now in this holding pattern here, it appears to me that we are just going to chop through it a little bit and be done with it. So with that said, I am bearish in this pair now. I did say on the lower time frames, once we do break the 97 level, I'll be looking for short to the downside. This is the 1 hour chart. Let's go to the 4 hour chart, which is where the action happened to start with. So yes, we had this mini double top pattern here. Wasn't very happy with it. I wanted to come back up again. Didn't like the 4 hour 50 EMA. Bear might have been respected a few times, but we chopped through it, broke down the 97 level. We did pop up. This is the lower high now. This is, and we've now started breaking down again. So what I would like to do is do something like that. That's my trend line. That's what I'm happy to look at. And notice as well now the bearish MACD divergence around this area here has played out nicely. Obviously the 1 hour chart was the same thing. Go to the 1 hour chart, and we drew this trend line, the upward sloping trend line last week. We did say if we break to the downside of it, we'd be interested. Notice how we did also mention the 1 hour 50 EMA, a perfect little down, little kiss up and break back down again. That's your perfect move down. That's quite nice. So yeah, we saw that happening. So like I said, where do we stand now? I do think we carry on going short, and I'll just look for another pullback to value and then start selling some dollar pairs. So that's where we stand at the moment. Our overall view for this week is to head back down. 96 is the key level where I think it'll go down to overall over the next couple of weeks. The reason for that is because we've got this these three lows here, and the weekly 50 EMA lies just below 96. The weekly 50 EMA sits at the moment, so 96 is clearly going to be the next level here. We may get into the yellow box, but I don't want to trade into that. I don't want to risk it, unless of course I've got a decent short from here at the top, and I can get two trades where it's a risk-free trade. So I'd only do it if I hold longer term. If you think the dollar's going to break down longer than that, I would definitely have a risk-free trade from the top. If you haven't, just get your profit before 96 and get out. So Aussie dollar. So Aussie dollar has broken the downward sloping trend line on the daily chart. It has. The weekly chart it looks like it's got a bottom to it now. It's coming back up to the upside. So that's what I'm looking for there. I know RSI on the daily is current to 100 again, but if we just zoom out, this is the MACD divergence, bullish MACD divergence. There's still two sets there. Small one was here, but a larger one at the bottom there, putting these peaks troughs together. So I am quite bullish on this pair at the moment, and if you see what I'm looking for now here, we've actually had a break to the upside and we've come back down again, and it looks like we've popped back up. So I think that really tells you that we are looking a bit more bullish. It's not the best dollar pair to trade personally, but if you notice how it respected the 4 hour 50 nicely, so I pull back down again now on the 4 hour chart to maybe 715 area. Around this area here would be quite nice. However, if you don't want to and you want to wait a bit longer, you could definitely wait for another retest of the 4 hour 50. Whether that happens, I don't know, but obviously that would be the best value point if you was to trade like that. There's another upward sloping trend line for you there, guys. So that's what I think is quite nice. Just a pullback. Where do you get out? Well, good question. And myself personally, I would look for roughly this high here, 727 roughly. That would be a nice out there. If not, the weekly 50 EMA at 724. So if you look here, 722. So you've got another level here in between. If you got a trade, let's say we put a trade there, we put our stop there. 724 is a 3% trade like that there. If you put an order in like that, you may want to wait, go down to there, have a much tighter stop if you do want to wait, and you got a 5.5%, but that trade may not actually happen. So play it by ear, guys, and trade your strategy on that one. Euro dollar. So euro dollar doesn't give me the same confidence as Aussie dollar. And ironically enough, when you look at Kiwi dollar, I think Kiwi dollar is the best trade of the week, but we'll go for it later. We do have a double bottom pattern there, which is quite nice, a nice little level there. But we stopped at this level of 113, as you can see with multiple levels there. Downward sloping trend line has stopped us there as well, and the daily 50 EMA. I'm not saying you should short this pair because there's no deceleration, there's no reversal candles, but it doesn't give me confidence to go long in that pair either. So for me to go long in this pair, as you can see, you've got, I think it's the falling wedge, and I do think we still head back up overall to this area here to get us the value we need before shorting again later on in the year. So I'm still waiting patiently for me to go long in this pair. You know what I'm going to say, it's up and down. Break the daily 50 EMA, come down to test it. These tests here, the other way around here, testing it would be nice. So like I said, we want to go up to here, and then that kind of area, come down, and then put in some low tests and this, that and the other. That's what I want for this pair. It does not give me the confidence right now to go long at all, and again to go short here is kind of crazy. And if you look at the lower time frame on euro dollar, the 4-hour chart isn't particularly doing it very well. There's a trade from last week, so we got that spot on as well. Might have mentioned that one. So yeah, you do actually have the idea was there perfect. So like I said, if you come up and come down, the 4-hour 50 MA, daily 50 MA be on your side, but that can take a couple more weeks to do so. And I think until such point it'd be risky. If you're thinking to go short here, there is no bearish pattern there. Okay, guys? There's nothing bearish about this pair whatsoever at this point. Let's look at the 1-hour chart just to see if we can confirm that. And again, there's nothing to confirm this is bearish, okay? Higher high, higher low, higher high, higher low, higher high, higher low. So let's put it this way, I don't think this is a short pair, and I think overall this is more of a trick for people to go short, to think, hey, let's get in and go short, because we just see, because most people just see this, to sit falling. I see it slowing down overall. There's a lot more chop there now, so just be careful there. Pound dollar, I'm avoiding this one like the plague. Why? I'm showing you pairs that are breaking out of their breaking out their patterns, and the pound dollar is doing something completely different. The pound dollar is actually looking like it's decelerating and wanting to reverse downwards. It shows how weak the pound really is. So at the moment, we had these tests of the daily 50 EMA, then we broke down and started testing 1.3. 1.3 has been key since Brexit over the last several years now, as you can see. If I'm not going to zoom back, this is what I call the Brexit cycle at the moment. We've got multiple tests across 1.3. So we are just testing that level at the moment. And what I don't like about this pair is this weekly chart. So this weekly chart here does not signify anything of value at the moment for me. For me to go long in this pair, it's got to break 1.325. That's got to do that. So that's what I'm looking for here at the moment. Hold on. So that's what I'm looking for with the pound in regards to what I'm worried about. So let's just now look at the lower time frame of the pound to see what could actually happen, because if we do break out of this triangle to the upside, 1.325 is definitely going to be key. The 1-hour chart just looks a mess at the moment because it's not moving, but here's the 4-hour chart, and this 4-hour chart does give you some form of structure. So I know we said a couple of weeks back we was worried about trading into this level here just because of the way the 4-hour 50 was, the way it's getting low. Notice here they are getting lower highs all the way through, but the lower lows are stopping. This here is just a bit of noise in the area. So if we do come down to 1.3 and you do get a couple of low tests, anything low tests, dojis, anything like that, it would be good to go long just back up to the 4-hour 50. However, if you can get two trades, one maybe like this with a nice tight stop like that, targeting doing your 1% there, but then you can get a second trade in, and you can extend that one to here to split the risk in half, you could actually have a risk-free trade going back up to 1.325. So for me personally, I think it's either going to be a breakout of this downward sloping trend line or break to the downside of 1.3. I wouldn't want to trade in the middle here because that's just a stupid game in all fairness, especially when the triangle's like this. So just trade either off the trend line or the key level here. Don't start trading in the middle because you're going to get wiped out like most truck traders do. So my best pair, I think, so far, Kiwi dollar. I like this pair the most this week. I think it's one of the strongest pairs this week. However, it's a counter trend trade. Let me explain why to you guys. So firstly, I want to go long in this market here. And I suppose some people are going to say, hey, look, yeah, up and down, retest, whatever. No. This is a lower low, this is a lower high, it's been trending downwards, we can zoom out, we can see it's trending downwards. So I think overall going short is ideally on this trade what I'd like to see. But I think on the daily chart it needs a little pop up, and that's going to give us enough pips to actually make it worth our while. So we've got the inside bar there on the weekly chart. RSI's dived quite a lot actually, down towards, what numbers that, 9, 10. So RSI is really oversold at the moment, so I think some buying pressure coming to the market. If we look at the daily chart now, the purple line 6725 has been key for so long now, for many years. Since 2016 we've had many tests on this 1, 2, 3, 4, 5, 6, 7. We're getting double figures, 8, 9, 10, 11, 12. So I like this chart, it's very nice. I think this downward sloping trend line is a valid trend line personally. The reason why, it's definitely 1, 2, 3 touches there. Could say it's a fourth touch, but let's just say it's not. Definitely 3 touches though. It looks quite nice. RSI though to go up though is very nice in daily chart, so it's at 0, which I like to see. And you go on the lower time frame, that's a double bottom pattern there, so that's quite nice, that is. So let's look at the double bottom pattern and see what we got here. Kiwi dollar. So here is what I like. However you look at this, there's your double bottom there at 672. Just pop that in there for you guys. There you are. We can zoom out in the past and see on the 4-hour chart it's being respected nicely. The 4-hour 50 EMA, look how clean this is. 1, 2, 3, 4 rejections so far. 5, 6. And it's little, even when it's been trending, ranging in this range here, it's still respecting the 4-hour 50 EMA. We broke up above it, and then it looks like we're going to come back down. So what I'm looking for now is a nice little trade on the 1-hour chart, and this is what I've come up with. So you could probably extend it up to 6795. You could extend it there, but for me personally, most trades or pairs will trade within the pivots they do for each day, roughly, give or take. And the fact that you're trying to push it a little bit extra there, that's 1.9%, that's 1.7%. So for 0.2% of a pair, you can pretty much guarantee you should get out there. It may smash past it, but just probabilities tell me that you just want to do what you know works all the time. So this is what I like. I think this will be a nice pullback down here. Now notice how I've got my area around about the 0.5 Fibonacci. My stop is below the 764 level. It's almost, I don't think we'll make a triple bottom in this pair in all fairness. We've already made a double bottom here already, we have, so I think we will go up. We've already broke the 4-hour 50 EMA, so that's what I'm looking for here really. No matter how you draw the downward sloping trend lines, the break and retests, it's always broken them. Also, I think on the 4-hour chart that was here, yes, the 4-hour chart, I want to show the divergence. So overall, the big divergence between this low here and these lows here is bullish, and also this low and this low is divergence as well, bullish divergence. So you've got 2 sets of bullish divergence there. Very strong trade. I would actually happily put an order there for 1.7% and let it just run and see what happens. That's the best way personally. It's on the move down as well as it is, so it's nice to see the pullback on a low volume pullback, which I quite like to see. Now I'm going to go through very quickly with dollar CAD. I think dollar CAD is a load of rubbish, and let me explain why. This is the daily chart. The green line is your weekly trend line, as you can see there. And the problem I have with this trade is I think the dollar is weak. I think the CAD is strong. I'll do that with other pairs at the moment. The problem is right now we've gone back straight into this daily 50 EMA and key level of 1.33. So I don't want to trade into it. So all you have in this trade really ideally is either the scope from 133 to downward sloping trend line, which isn't going to be much, or you've got this upper sloping trend line which has been trending for months, or actually years. I think it's a couple of years. How long is that trend line again? A year or so. Just over a year this trend line is. So what trend line do you want to trade into? Well, that's just stupid. A stupid question, Joyce. Don't want to trade into either of them, really. So for me personally, I would ideally want to trade this triangle here, this downward sloping trend line, if you was, but I'm just going to sit on my hands and wait for this to get out. Especially when you've got such nice pairs like Kiwi dollar, to give you an example. Dollar CAD, it's not the best in the world. And the other pair we have now is, the last one is dollar yen. So ideally you see 112 is a nice key level, and we can go back in the past, but the problem you have is there's no reversal candles here. So pretty much like euro dollar just a few minutes ago, where we've got the candle at a key level but it's not actually reversing or decelerating. Now if you look at all other yen pairs yourself, you'll see that the yen has actually moved, the yen's got weak across the board, so it does mean this could actually break out. Now if it does break out, I would like a break and retest of this 112 level. Something like here would be nice. Pop up, pop down, there's your retest, and move back up again. So that's what I'll be looking for. Likewise, we may get some, you see here we get a couple of doji candles, get a couple of doji candles afterwards. I'll be looking to sell. So this one is sit on my hands, wait and see what happens. There is no bearish trend change patterns at the moment. Just to prove the point here, there's your 4-hour chart. It's just moved up, and the 1-hour chart is just rapidly moved up as well. So there is no bearish patterns, so just sit on your hands and wait for it to happen. Okay guys, I know it's a quite detailed video. I hope you enjoyed the review. Can you just let us know how you feel about it being this long and the pairs I've chosen, and I will speak to you soon guys. Thank you, take care.